They were scaling fast with cloud-based training modules, but in several states, those modules were taxable and they weren't collecting sales taxes. So they were a Bay Area company and they were growing quickly. They were selling their training platforms nationwide and not collecting sales taxes. They hired a new CFO and he came in and discovered that sales taxes were not being collected across all their transactions. Taxes should have been collected at the point of sale, but they weren't. They had missed this, and now they were trying to resolve these past issues. They hired us to come in and take a look at what was going on. We did a state-by-state exposure analysis. We determined that they had exposure going back several years, which included tax, interest, and penalties that were in the hundreds of thousands of dollars. So we were able to mitigate the exposure through voluntary disclosures and registrations and back filings. Ultimately, we reduced the exposure by over $250,000. This gave the company now a very structured and compliant look forward and framework to move forward into their business. Leadership regained confidence again in their process, and now they were back on track with their sales and use tax. The takeaway is that in SaaS companies, complexity scales with growth. Get ahead of it before it gets ahead of you.